Recent developments in global finance and geopolitics have created what many believe to be the beginning of Bitcoin's most significant bull run to date. Following a major de-escalation in US-China trade tensions, which saw both countries dramatically reduce tariffs from 145% to 30% on the US side and from 125% to 10% on China's, markets responded instantly. The US stock market added to $1 trillion in value at the open. Gold, often seen as a safe haven asset, declined in response. Meanwhile, Bitcoin appears to be thriving in this new environment of renewed liquidity and reduced monetary tightening. Many are calling this the pivot without the press conference. Bitcoin's price is becoming increasingly stable, not because volatility has disappeared, but because it's shifting elsewhere. A structural shift is taking place. Large institutions such as MicroStrategy and asset managers like BlackRock are accumulating Bitcoin on an unprecedented scale. MicroStrategy alone now holds over 568,000 BTC, and IBIT, combined with MicroStrategy, controls more than 1.15 million BTC, roughly 6% of the total supply. Public companies and sovereign entities are beginning to treat Bitcoin not just as a speculative asset, but as a fundamental component of their financial infrastructure. For example, Japan's Metaplanet recently allocated 20% of its treasury to Bitcoin, now holding more BTC than the country of El Salvador. A number of US states, including New Hampshire and Arizona, are exploring legislation that allows them to hold digital assets. Additionally, Middle Eastern sovereign wealth funds and institutions such as Tether are quietly increasing their exposure to Bitcoin. This trend is further supported by a new peer-reviewed study published in the Journal of Risk and Financial Management. According to the model, Bitcoin could reach $1 million by early 2027, assuming average daily net withdrawals from exchanges exceed 1,000 BTC. If daily outflows surpass 2,000 BTC, the model projects a price of $2 million by 2027 and potentially $5 million by 2031. These projections are grounded in Bitcoin's fixed supply, increasing institutional demand, and the growing behavior of long-term holding among users. Unlike traditional commodities, Bitcoin's supply cannot be increased in response to rising demand. When supply dries up, price is the only variable left to adjust. Corporate treasuries are also evolving. While companies like Dell have voted against adding Bitcoin to their balance sheets, others, such as David Bailey's KDLY, the first publicly traded Bitcoin conglomerate, are aggressively moving forward. Many companies are now exploring the idea of using their balance sheets as a strategic lever to acquire Bitcoin by issuing debt or selling equity to buy digital sound money. At the sovereign level, this quiet arms race is gaining momentum. While most sovereign wealth funds are waiting for regulatory clarity, particularly in the US regarding stablecoins, banking custody rules, and tokenized securities, there is evidence that many are already making modest Bitcoin purchases. As Anthony Scaramucci of Skybridge Capital recently noted, significant buying may accelerate once the necessary regulations are in place. All signs point toward institutional adoption of Bitcoin, not just from hedge funds and asset managers, but from states, corporations, and sovereign nations. As Bitcoin continues to integrate into the global financial system, the vision of $1 million Bitcoin becomes less speculative and more of a logical consequence of current trends. In the months ahead, the Bitcoin narrative may shift from if to how fast, and that momentum is set to culminate at the Bitcoin 2025 conference taking place at the Venetian in Las Vegas from May 27th to 29th. With major political figures, investors, and innovators attending, it's expected to be a defining moment for the next phase of Bitcoin adoption. As the world moves toward a new monetary paradigm, Bitcoin is positioning itself as the foundational asset of the future. Institutional players are leading the charge, and the rest of the world is beginning to follow.